What's up, good people? How you doing? Welcome to Stock Up with Larry Jones. If you're new to the page, like, subscribe, notification bell. FOMC meeting, interest rate hikes. It's pretty much priced in or baked in for us to go up one rate hike, which the Fed will be announcing here shortly, probably by 25 basis points. The question is, will he talk hawkish or dovish? And for all of the press that's going to ask him questions and try to have those gotcha moments just to tank the market so they could do the Beavis and Butthead, I did that, shame on you. All right, so I'm going to timestamp this video, of course. And you know how we do this. We just go over, we leave comments. Now, they shut us down on the way that we could stream these right now. So I'm going to try it. If the video freezes, I believe you'll still be able to hear the audio. So if you're just tuning on, we will be airing. We're going to attempt to air the FOMC meeting, okay? If they don't shut us down, all right? So, hey, what's happening? What's happening? Hey, good morning, good people. So it will be timestamped. So if you're watching this after the FOMC meeting, it will be timestamped. You can go right to it. But first, make sure you download the top link below and get your free stock. Look at this. Moo is the platform. If you hit $100, you deposit $100, you're going to get 5 free stock and $50 cash reward. And then lastly, this is brought to you by Stock Up You. If you want to simply do better, understand the market better, come and check us all out as we teach you how to navigate in this market. Okay, so let's look at where the indices are right now. We got a few minutes before, as we could see. Look at that. All right, the Dow's pretty flat. You know, everything's kind of mellow yellow right now. We will see. So now I want to show you guys something. We got 2 minutes. I'm going to show you guys something. Remember when I was talking about the Chinese ADRs and I didn't play earnings, right? So look at this. I want you guys to look and see what's happening. NIO was just up by 10%. Baidu is up, and then Alibaba is up. And so what I did, what I did was I entered into a NIO call this morning, just got in and got out. And I actually got out prematurely because it continued to run up a little higher, right? And then what we got? Oh, we got 1 minute. I want you guys to keep your eye on this stock, all right? I want you guys to keep your eye on this stock. Ticker symbol SIMO. It ran up a lot quick. Look at that. It's up by 77%. So just keep your eye on that. You guys know how I do it. I'm looking. It ran up so much. You guys know I'm going to look to short it. All right. But let's still do our due diligence and see what's going on with it. Now I'm trying to move this apparatus around so I could get this thing going and hopefully get it going live here. Let's see, will it let me do this? Okay, it's going to sign me out a couple of times, and I just want to be able to get it going. This is what I got to do now. I got to find an old computer that doesn't register and try to get it to play. And that's what I did on last time. So we're going to see if it allows me to play. It errors a couple of times. That's okay. But last time it worked. Let's see.
Down to 2. I think the Fed should have some confidence in that.
Less than a minute to go, Stephanie. We had the S&P 500 up 5% since the last Fed decision. What's the first thing on your screen that you take a look at when that decision crosses?
Right.
Oh, well, the overall reaction, but I don't want to get too caught up in the short term because we got to hear what he has to say. And then we usually have to digest for, 24 hours, sometimes 48 hours in terms of what exactly they said. But I don't really think that there's going to be big surprises on this one. I think it's well telegraphed. 25, but it's just about.
Yeah, like she said, I don't think it's going to be any big surprises. I'm not going to air the question and answer. I'm just going to air what the Fed says and then end it there. Then I'm going to come back later and we'll discuss the market. Let's see. Let's see if this thing behaves. But if it doesn't behave, then just listen to the audio if it freezes, okay?
The Federal Reserve raising interest rates by 1/4 of a percentage point in a unanimous vote that brings the new range to 5.25% to 5.5%, the highest Fed funds rate in 22 years. And the Fed continues to signal the possibility of future rate hikes. It says it's going to be looking at, quote, the extent of additional policy firming that may be appropriate. That's the kind of language it used in June, which kind of told us that July was on the table. It says in doing so, as it did say in June, it would take account of the cumulative and lagged effects of prior hikes. Economic growth was raised just a little bit. They're saying it was moderate economic growth compared to modest in the prior report. So I guess a modest upgrade you could call it. Job gains were robust. The unemployment rate remains low and inflation remains elevated. Remain in the statement about tighter credit conditions from banks, but those effects were seen as uncertain. Very much a carbon copy of the prior statement, guys. The only difference here is they took out holding to raising. They raised by 1/4 point, and now they're back into this mode here of determining the extent of additional policy firming that may be appropriate. So there's your guidance line. Have at it, Tyler.
The language there, David, on extent, it's clear that they did not say whether additional policy firming is required.
I think, and unfortunately, I think we're going to see that in Chairman Powell's press conference too, where I'd be interested to see. Last time around, he talked about further rate hikes. The committee was in favor of further rate hikes, plural. I think that's still an open question. Will they talk about additional policy firming? Well, that could be one or two. So. But still, they're leaving it out there. They're still trying to sound hawkish. And as you noticed, Steve didn't mention anything about them saying, hey, we made some progress in inflation. Yeah. So I'd like to hear that from them.
So I heard an important word there, and that is unfortunately. I think we're going to hear the same thing in the. Why do you think that's unfortunate? And then I'll get the reaction from our panel.
Because this is this game of monetary Jenga. Where we don't know what's going to knock the economy into recession. But if we're headed, for 3% inflation, what's the big deal? I'm sorry, but there's, if we were 8% inflation or it was runaway, that's fine. That we need to deal with it. But if it's 3% falling down to 2%, it's not worth threatening.
Hey, I'm going to let that play on. Somebody said, dang, Larry, how was we supposed to know about NEO? Well, you're supposed to, because when I come on in the morning, like I did on yesterday, and I pointed to the Chinese ADRs, I called out Baidu, Baba, and NEO, and I said that the President Xi, may be, doing some sort of stimulus package. That is your sign. Remember, good people, I'm not going to just say buy here, sell here, buy here, sell here. If you heard me say that yesterday morning, please leave a comment for this person that didn't see the video on yesterday. OK, I can't hold you by the hand. I literally pointed you in the right direction. And that's what I'm going to do. So if you're probably new, and I'm not getting on your case, you're probably new to trading. It just doesn't work that way. OK. So now the FOMC meeting is, as you could see, 25 basis points is where we are. That was baked in. That was a 99% chance that was going to happen. So that happened, right? The market has not reacted in any way to that. It was so baked in and so expected. As you can see, the Dow was up, 20 points now. I said basis points. 20 points now based on the release of the news that we all knew that was coming. Okay, we all knew that was coming, right? And so that's where we are. Yep. Thank you. So I just want you guys to know this is we're more about education here than just here's a hot play, here's a hot play. If you really listen to my mornings and my afternoons as I explain the stock market, there's a lot of action that you can get into, right? All I can do is point you in a direction. All I can, like Keenan says, all I can do is create the play, but you have to run the ball, right? All right. Yep. No surprise. All right. So there we go. All right. So let's see here. So what we're going to do is he's going to be talking. The Fed is going to be talking shortly. All right. So what I'm going to do is redo all of this process because they blocked us all from just airing it live. And I found a workaround by finding an old iPad. And because I want to keep you guys fed, I want to give it to you real. Now, we do know, I want to say this in closing, it doesn't matter that we now have this number. The question and answer will start, right? You guys know how this goes. There's going to be somebody that's going to try to ask a gotcha question. And that could bring the market down a little bit, though I don't think it's going to be as drastic as it has been in the past because it's kind of baked in. And yes, he will probably say, yes, we will go up again if needed, data dependent. All of these things that the Fed always says. It's no surprise, good people. But I caution you not to have a knee-jerk reaction because at the end of the day, which is today, that's not going to be the reality of how this market is going to process this information. The reality of how this market processes this information will show up tomorrow. Okay, so remember that. Remember that in your trading. Okay. I recommend Webull for my DCAing. So that Webull will be the second link. That's why I do my options and my swing trading because the options chain is really easy with Webull. But as far as your building and all of that, we Moo. That'll be the top link. Okay. All right. So that's what I'm gonna do. We're gonna just come back after the dog and pony show, right? I didn't want to make this one too long. I just wanted to air this stuff in real time. There was like a 3-second delay and make this one short so a lot of people can see it. And then I'll make another video after the Fed meeting is over. And remember, he's gonna be done before closing bell. The market will react, but I'm just cautioning you not to overreact on your plays. If you played the Qs, the TQs or the SQs, if you did calls or puts, just know that tomorrow really will be the reality of it. Now, I will tell you this myself. Google is a play that I am in long term, right? In my DCA. For those of you that are doing the $5 a day challenge, or for those of you that are dollar cost averaging, if Google drops while he's talking, I am going to buy some more Google in my $5 a day challenge, right? And when I say I'm talking a nice little chunk. I mean, not a lot, maybe $1,000 I'm going to put into Google into my $5 a day challenge. Okay. That's some of the things that you can do. Now, that's unusual for me because usually I wait till a stock come down and then I add it. So just because you're doing a $5 a day challenge and you're DCAing doesn't mean that you only can put in whatever you've been putting in incrementally. You get what I'm saying? So you can, if you see opportunity, you can go in. Now it's been upgraded. Google has been upgraded by Guggenheimer, if I'm saying the word right, and it's higher to where it is. Where is that at? Yeah, Google was upgraded from 120 to 150, and so that's why I'm buying some more of Alphabet. Okay, that's what I'm doing. Okay, and remember, you do you. I'm going to do me. All right. Yes, he increased by 25 basis points. And that was expected. Like 99% that was expected to happen, and he did exactly that. All right. Make sure you check out the links below. We're going to end it right here, but I will be back later. So make sure you come back and see your boy. We'll see you later.